what we discovered is Bitcoin is digital capital. Bitcoin is going up faster than the S&P forever. Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, my forecast is it appreciates about 29% a year for the next 21 years. And if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. This is the digital gold rush in the 10 years from 2025 to 2035. There's going to be a lot of different business models, a lot of different products created, and a lot of different companies launched and a lot of money made, and there'll be a lot of mistakes made, and there'll be a lot of fortunes created. And
Bitcoin's chart is flashing danger, yet traders keep piling in as if nothing is wrong. The buy the dip mantra is louder than ever, but underneath the surface, the data tells a different story. After Monday's $1.7 billion liquidation, the largest of the year, traders rushed back into new longs, hoping it was just another shakeout. High blocks volume delta paints a harsher picture. Sellers still dominate, crushing rebounds while leverage continues to climb. A liquidity trap looms at $17,000, ready to catch the reckless. Spot volumes are drying up, futures are running the show, and conviction is scarce. Open interest may look healthy, but without real buyers, it's nothing more than smoke and mirrors. This so-called bull market could be a death rattle, the late cycle phase where confidence masks fragility. Every uptick feels like bait, every rebound is set up for the next collapse, yet retail traders and whales push harder, blind to the risk. Amid the chaos, Michael Saylor offers a different perspective. He frames Bitcoin not as a speculative asset, but as humanity's bridge between rich and poor, old money and new freedom. His vision suggests that the turmoil we're witnessing isn't the end, but the violent birth of something far larger. The real question remains, are we seeing Bitcoin's slow-motion collapse or the cleansing fire before its next legendary rise?
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I think there's a natural ebb and flow in the economy and in the community. And so Bitcoin surges up and has periods of extraordinary excitement, generates a lot of adrenaline and enthusiasm. Then there's a celebration, and then people extrapolate straight line to the moon. And then it retraces a bit and consolidates. And then people think, well, it's going to bounce back really fast. And if it chops sideways for a while, there's always a natural human tendency to get frustrated. I don't think we have anything to be unhappy about. The truth is, if you zoom out and look at the 1-year chart, Bitcoin is like up 99%. It's like nearly double. So if you walked in up to anybody in the street and said, hey, I'm heavily invested in an asset that is growing up 100% a year, should I be happy or not? They would say, you should be happy, right? It's just that the way that it gets there tends to be a bit volatile. As for why, I think the why Bitcoin has been consolidating, building its support in the teens right now, is because you've got $2.3 trillion of Bitcoin that is unbanked. You've got a lot of people that own a lot of Bitcoin, but they can't get a loan against it. And because they can't get a loan against it, the only, at the point that you all of a sudden find yourself Bitcoin rich, but fiat poor, you don't have a lot of dollars, but you have a lot of Bitcoin and you can't borrow against it, then you think, I have to go sell it. So I think Bitcoin's right now, it's like this Mag 7 startup where all of a sudden all the employees got insanely rich on penny stock options, but they can't borrow against them, so they have to sell them. And so they're selling, and then people are saying, well, why are those employees selling the stock? Is that a vote of not confidence, in the company? And the answer is no. It's just they have kids to go to college. They want to buy a house, right? They want to live comfortably. They want to do something for their parents. And so right now, I think that the selling is crypto OGs that have had a lot of money for a long time. They're selling 5%, diversifying, they're doing something like that. And the market is absorbing all of that energy, building its support. The volatility is coming out of the asset. That's a really good sign. But because what you want for the asset to mature is for lots of long-term capital holders, the big corporations, the big institutions to buy. You want the early OGs that bought Bitcoin for $1 or $5 or $10 to sell some or as much as they need to so they feel comfortable. You want the volatility to decrease so the mega institutions feel comfortable entering the space and size. And the conundrum is, well, if the mega institution's going to enter, if the volatility decreases, it's going to be boring for a while. And because it's boring for a while, people's adrenaline rush is going to drop. And it's like they had this big high and now the adrenaline is wearing off and they're a little bit bearish. But this is just a growing stage or, natural for the life cycle of an asset that's monetizing like this. There are a lot of assets, the greatest property assets of Western civilization, assets like diamonds, assets like gold, assets like old masters' paintings, assets like land, the Louisiana Territory, California, Mexico, all of Alaska. None of them have cash flows, right? All of the great things we've acquired in life. Truthfully, if we think about what we want in life, whether it's a spouse, a marriage, kids, they have no cash flows. A house, no cash flows, right? So the world's full of things, right? A Nobel Prize, no cash flows. Fame, no cash flows. Yeah. Yachts and jets don't have cash flows either. So the world's full of things that are deemed valuable in the world. They have no cash flows. And of course, as we know, the perfect money has no cash flows. The whole definition of money, a liquid, the most saleable asset. But if you want something to be money, you want it to have no utility value. Gold is better than silver because it has less utility value. And when copper or when you find something like silicon that has utility value of some sort, it becomes worse money. And so I think probably people say, well, we don't really think this is good investment asset because it has no cash flows. That's an opinion that has developed in 2 generations. Certainly since 1971, in the period, from 1971 on till today, I think the world developed a view, and its view was, long-term capital is a 60-40 mix of bonds and equities. And bonds had some dividend yield to them, and then bonds had some coupon, and equities had some dividend yield or some earnings. And that's just the way they saw the world. And eventually, the S&P 500 became the monster. If you look at index investors, 85% of indexes are invested in the S&P. So many people think long-term capital, what they think of as money held for the long term, is an equity index like the S&P index. Vanguard, they commercialized this and they made famous the idea of the Vanguard 500 and the Vanguard Index Fund. So when organizations are hyper successful with an idea like 500 stocks in a fund, and when the entire institution, right, the S&P or Vanguard or mutual funds, when they're built on that idea, when a disruptive new idea comes along that's even better, it's not natural that they would embrace the disruptive new idea. They're kind of stuck in their ways. As a practical matter, in a world of that's U.S. dollar, the U.S. economy is growing and the dollar is the king of the world. It's the world reserve currency. And there was no world war after World War II, right? Mm-hmm. So we haven't had a massive disruptive world war. Then you're living in a very particular situation, a particular time, and you could fall into. In calculus, we call it a particular solution to a differential equation. If all of the boundary conditions are set, and if this, 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 then you can just plug in this number and you'll get out that answer.
Saylor addresses the bearish sentiment head-on, framing Bitcoin's ups and downs as a natural cycle of excitement, consolidation, and frustration. He emphasizes that the picture is clear. Bitcoin has risen nearly 100% in a year. This isn't failure, it's growth. The current dip, Saylor explains, comes from early adopters selling to diversify or cover expenses, as many cannot borrow against their Bitcoin. This selling actually builds a stronger foundation, attracting large institutions drawn to lower volatility. For Saylor, this is Bitcoin maturing, not stalling. He also challenges traditional finance's obsession with cash flows. Gold, land, even Nobel Prizes, none generate cash flow, yet they retain value. Bitcoin, he argues, is the ultimate money, a pure store of wealth. While conventional investors remain tied to bonds and stocks in a mindset stuck since 1971, Saylor sees a major shift ahead. In chaotic economies where currencies collapse and savings erode, Bitcoin not only survives, it thrives, offering stability where fiat fails.
If you live in a economy where the currency is collapsing, like Lebanon, and they freeze your bank account and the currency goes to zero, or anywhere in Africa, or if you lived in Argentina when the currency collapsed, then if you actually owned anything with cash flows, they're all worthless. So the irony, of course, is one of these good traditional safe assets that generates cash flows. Well, not in Nigerian currency, not in the Bolivar, not in the peso, not in the Lebanese currency, not in the Iraqi or the Afghani currency. I can give you not in a Russian currency, before the collapse of the ruble that took place at the turn of the century, 96 or something. So the people that have these ideas, they have a particular set of solutions that work in a very stable, closed ecosystem that's never been challenged either with external stress or never encountered a new idea. The people that will get Bitcoin will either come out of very chaotic environments, collapsing currency environments where they had to think for themselves, or they'll be at their base kind of scientists, first principles thinkers, people that question everything and rederive it. So I think the great irony is again the CEO of Vanguard saying Bitcoin is not an investable asset because it doesn't have cash flows, and then the largest shareholder of my company being Vanguard. If you look at the credit markets, you got mortgage-backed credit. Mortgage-backed securities are 1.5 times collateralized, and they yield like 2, 3, 4%. And then you have fiat credit. It's credit backed by the promise that the government will print more money. Mm-hmm. And that sets the risk-free rate. That credit, in Japan generates 50 basis points, and Switzerland generates minus 50 basis points. In Europe, 200 basis points a year, and in the U.S., about 400. It just got reduced by 25 basis points yesterday, right? You have that kind of credit. Then you have corporate credit, and corporate credit is backed by the cash flows of companies, whether they're good companies like the Magnificent Seven, like Microsoft or Apple, or they're junk bonds, or they're struggling companies that are struggling to stay in business. Those credit spreads can range from 50 basis points all the way up to 500. But that means that when you're buying corporate bonds in Europe, you might be getting 250 basis points a year in yield, 2.5% interest. Well, the real monetary inflation rate is greater. So all of these countries, Japan, Switzerland, Europe, the US, they're all suffering from a form of monetary repression where the natural risk-free rates or the fiat yields are less than the monetary expansion rate and the rate at which scarce desirable assets are appreciating. So that's one challenge. The other challenge is those instruments are illiquid. Sometimes, like all preferred stocks, they're very hard to trade. Sometimes they don't trade at all, and they're under-collateralized. So what we observed is the credit markets are weak. They're unhealthy is how I would say them. If you live in Switzerland and someone is willing to give you zero or take 50 basis points of your money every year you have it in the bank, and that's the offer, one can't characterize that as anything other than weak Yield starved is another way. And so a lot of markets are yield starved. And on the other hand, most people, like in the conference the other day, there were 500 people in the room. And I asked them, how many of you have a bank account? Everybody's got a bank account. You know, how many of your bank accounts yield more than 4.5%? None of them. How many of you would like your bank account to pay you 8 or 9 or 10%? All of them. Who's offering that? Nobody. What we see is the opportunity in the market is, unless you have Bitcoin, unless you have a long-term store of value, what I'll call digital capital, and you're going to hold it for the next 30 or 40 years, no one's willing to give you a fair yield for the long term. Like, tell me who's going to give you 10% interest for the rest of your life?
Well,
no bank.
You are.
Yeah, we are, right? The Bitcoin community is, right? Your bank won't, a company won't, a government won't, no mortgage-backed security issuer will. So what we discovered is Bitcoin is digital capital. Bitcoin is going up faster than the S&P forever, right? Once you actually acknowledge that Bitcoin is appreciating more than the S&P forever, and my forecast is it appreciates about 29% a year for the next 21 years. And I've shared that with the community. But you could have any forecast. But if Bitcoin is an asset and it's appreciating, then you can create credit collateralized by that appreciating asset. So Bitcoin's digital capital appreciating faster than the cost of capital. The cost of capital is the S&P 500 return. Mm-hmm. And then credit written against it or issued against it is digital credit. And the digital credit can have longer duration or it can have short duration. It can have higher yields. It can be in any currency because Bitcoin is a stronger currency, right?
Saylor's bold vision centers on transforming the credit markets using Bitcoin as collateral. He critiques traditional credit systems, mortgages, corporate bonds, government debt as weak, offering low returns yet high risk. Bitcoin, growing faster than the S&P 500, flips the script. He envisions digital credit instruments built on Bitcoin that deliver higher yields, lower risk, and greater liquidity than conventional bonds. Some are designed to mimic bonds, steady and senior, while others lean toward equity, offering higher risk but bigger potential returns, with yields possibly reaching 12.7%. There are even instruments resembling money markets, low in volatility and paying monthly dividends, something old finance has never seen. For Saylor, this isn't just about chasing profit. He sees a financial system centered around Bitcoin, powering both equity and credit, attracting global capital, and strengthening the network. He hopes credit agencies and rating systems will one day recognize these instruments. While traditional finance moves slowly, the S&P 500 itself is reluctant to embrace innovation. Progress is visible. The number of treasury companies in crypto has grown from 60 to 185 in just a year. Beyond markets, Saylor views Bitcoin as a peaceful revolution in a fractured world. He believes it can empower people and weaken corrupt systems that fuel inequality. He warns that much online outrage is manipulated by bots or paid actors, urging people to think independently, ignore the noise, and focus on what unites us. In his words, Bitcoin can spread fairness and truth, breaking through the chaos of manipulated protests and distorted media. Looking ahead to 2025, he calls this a digital gold rush, a decade to build wealth and bridge divides, if people embrace Bitcoin's potential and tune out the trolls. For Saylor, this is more than a market shift. It's a humanity shift, using Bitcoin as a tool to create order amid chaos. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.